What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, we are going to be covering the SoFi stock. It has been an extremely painful last 3 months for SoFi investors ever since that, last earnings report, the convertible note deal, the insider selling, and now you're getting closer to earnings. You're getting massive downgrades. The list goes on. I've been hearing that this stock is potentially 19 to 20% short when we get this next update, guys. This is absolutely insane when you're talking about how potentially close we are to getting, a rate cut. So today, Jerome Powell speaking wasn't enough volatility. We know that stocks go up and down when Jerome Powell talks. The analysts had multiple downgrades ready this morning, guys. I counted about 10 media outlets that posted these sell ratings and price target updates, guys, and it's absolutely insane how these analysts want to come at this SoFi stock on their timing. Okay, it's definitely not to benefit SoFi investors. It's definitely to get the stock going lower by any means necessary, and that's exactly what they did this morning. But we saw that the stock went down 3.5%, and the stock bounced back to actually going green. Okay, I believe shares were changing hands to potentially some longer-term, durable institutional investors, because we've been seeing that go up the past 2 years in a row to potentially around 44% right now. We want to see this at a 50, 60%, by the end of this year, and I think we are definitely going that way because these institutions see the direction that the company is headed. Profitability, full year, durable growth, and the list goes on. I believe what SoFi needs to do to get this stock really moving is they have to be perfect across the board in every segment. That's lending, that's Galileo, financial services, deposits, and member growth, guys, and debt going down. Okay, it has to be perfect across the board, and we have not seen that. We just see little hints of greatness here, and then this part goes down, and then the shorts and the analysts, they have a direction to attack. Okay, they're going to go after the weakness, and they do that every single quarter. So of course I believe Q2 may not be out of this world unless we get some crazy news about a large Galileo legacy bank getting signed up. Okay, and that's kind of correlated to like Tesla, FSD, when you're talking about signing a top 5 legacy institution, to your, tech platform. Okay. That's absolutely insane news because of the revenue that those companies do. We're talking 20, 50 billion, dollars in revenue. If you get one, you're going to potentially land another 2 out of the top 10. Okay. So that's kind of correlated to the FSD Tesla hype. And that's the fantasy that the SoFi investors are living right now. Okay, we want a large legacy bank to get onto the Galileo platform. That's what we're waiting on. The good news is SoFi has potentially been in talks, with those legacy banks, and it only takes one, to land the second. So that's what we are definitely waiting on. But I'm, not betting on that for Q2. But I'm just saying it could potentially happen, out of the blue, out of nowhere, and that's going to get the stock ripping up dramatically because you're going to get that tech hybrid multiple, moving up in the right direction. Remember, guys, CEO Anthony Noda, his long-term goal is to be the AWS of fintech. Okay, and that's exactly what they have been building up. Acquiring 2 separate companies for $2.2 billion. So once again, guys, in today's video, we're going to cover the negative headlines, and we're also going to cover some good things that I'm seeing in SoFi that's not getting credit for and stuff like that. So be sure to smash the like button, drop a comment. Don't forget to subscribe to the channel. We're going to be keeping you updated today. Let's get into the video. All right, guys, you see it right here, the SoFi stock. I'm actually making this video inside of the market right now, 3:20. So we got about 40 minutes till the close, and you can see the SoFi stock is down about 0.01, 0.02%. But guys, this is the drop we were talking about today, about 3.5%. And this is when all the headlines, dropped in the morning. Let me show you real quick on Webull. So right here, guys, are the headlines. You can see the KBW downgrade. That's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. About 10 to 12, headlines, of just pushing that downgrade, down your throat. And it worked perfectly, guys. You got the 3% pullback. That's exactly what they were looking for. I believe, these guys were definitely looking to, get these shares changing hands from retail over to institutional. And hopefully we see institutional, jump up another 3% when we get an update. And you guys can see, the stock is literally on the verge of going green for the second time today, after that nasty drop. You guys can see Jerome Powell spoke this morning, and unemployment rate going up above 4% finally, and basically he said the U.S. economy no longer overheated. We are well aware that we now face two-sided risks and can no longer focus solely on inflation, Powell told the Senate Banking Committee on Tuesday. The labor market appears to be fully back in place. Understand, guys, just literally in about 2 more days, July 11th, the next CPI report comes out. July 11th for the month of June. And, hopefully we see another, small little drop in inflation. I mean, it's been really sticking at 3%, guys. If we can get down into the, mid to high twos, that would be absolutely insane. I believe we're not going to see that in June, but hey, as long as we get a, little bit of a pullback, that could be a big help to potentially getting some rate cuts by the back half of the year. And you're going to see SoFi, push the pedal down on lending once again. All right, guys, you can see the downgrade today came from Barclays. Just cut its price target on SoFi. SoFi is down on multiple price target reductions. And if we scroll down, another one right here, KBW has lowered their price targets. And both the price targets were dropped from like 10 to 8 and 10 to 7 or something like that. So take a look, guys. This is Terry Ma, Barclays. The guy's not even a 3-star analyst. He's literally a 2.5-star analyst, having the right to drop downgrades and sell ratings the day Jerome Powell's speaking. I mean, you can't take these clowns serious at all. They're probably getting used by their institutions, because they know their, ratings are absolutely dog shit, and, they could care less. Still get a bonus for, dropping these nasty downgrades. And you also got KBW, Tim Switzer. The guy's literally not even 3-star analyst. He's still in the 2.8 range, 2.6, ranked 4,000 and 8,000, the exact same thing. This guy's probably just a, another puppet out there being used for, a bigger tactic of, manipulating shares over to the institutional investors. And these guys came out double whammy today at the exact same time with Jerome Powell speaking. And it's just really manipulated, in my opinion. You're seeing how aggressively the stock is bouncing back today. Literally red to green, back to red, back to green. I mean, bouncing back from a 3.5% drop, that's pretty, dramatic, because you don't see SoFi have any level of strength at all. So I believe shares were definitely changing hands today. And guys, something I wanted to look at, okay, this is very important because you're seeing where the newer age generation is putting their money. They're putting their money into fintechs, guys. They're not, going over, back over to legacy banking, with, building infrastructure. They're putting their money in digital banking, okay? Just look at the SoFi money accounts and the average deposits of the entire bank, and then the average SoFi money account average, okay? Just look at this. Q2 2022, there was 1.8 million accounts, 2.7 billion deposits, was averaging around 1475 for a SoFi money account. That jumped up to 2 million account total, 5 billion deposits, 2,500 SoFi money account. 2.2 million accounts, 7.3 billion deposits, 3,300 average SoFi money account. Q4 2022, move over to Q1 2023, 2.4 million accounts, 10.2 billion deposits, 4,200 average SoFi money account. 2.7 million accounts, 12.7 billion deposits, 4,700 average SoFi money account. Q3 2023, 3.1 million accounts, 15.6 billion deposits, $5,000 average SoFi money account. Q4 2023, 3.4 million accounts, 18.6 billion deposits, 5,400 average SoFi money account. And then the last quarter, 3.8 million accounts, 21.6 billion deposits, 5,600 average SoFi money account. Guys, look at the direction that this is headed. I mean, these are, people that are making, really good money, high FICO scores, great jobs, a lot of expenses, of course, with their, student loans, mortgages, cars, families, whatever. But guys, these average money accounts are going to be headed to, $10,000, $20,000, pretty soon. And, SoFi is going to be at 99% funding through their deposits, no warehouse facilities, guys. And they're going to continue to make more money. People are going to get that, nice interest. And 90% of these accounts are signed up with direct deposits. So guys, you're going to see more and more money, get onto the platform. And I'm really excited to see this hit, average $10,000, savings account for, potentially 5 million accounts by the end of this year, guys. I mean, that is absolutely insane, and it's just beginning, okay? So people are moving their money, and they are moving money faster and faster to the SoFi platform. And SoFi is using those deposits to fund their loans and, give back to the customer rather than, giving the SoFi investors a dividend. So if you're a SoFi customer, you're definitely getting hooked up. Be sure to click the link in my comment section. Sign up for the SoFi, checking account, hook up to direct deposit. You got your 4.6 APY. You're growing your cash on autopilot. All right, guys, and I just want to look at a really, basic metric, talking about that revenue, that price to sales. This is one that was going crazy in 2020 when all the companies were hitting public. I remember, what I really remember about price to sales is Jim Cramer came on. He was talking about Snowflake, and guys, Snowflake literally at one point hit 100x times sales. Yes, 100 times their revenue. Okay, in 2020, it was absolutely insane. But guys, just look at these legacy banks right now. Okay, these companies are literally getting smacked by fintech. Just losing those deposits. Morgan Stanley's trading at a 3.25 right now price to sales. JP Morgan is trading at a 3.7 price to sales. Bank of America is trading at a 3.3 price to sales. And SoFi is going at a 2.99 price to sales. Guys, we are literally priced under legacy banking metrics right now when you're going off of our revenue. This also includes like revenue growth, which is higher than all of these compounded the last 3 to 5 years. So right now SoFi is dramatically undervalued. You're priced lower than a Bank of America, Morgan Stanley, JP Morgan. I mean, this is pretty incredible right now, the valuation you're getting at the $6 billion range. So I believe more realistic valuation is like a 5 to 6 times price of sales. Your stock price will probably be around $10 to $13 or something like that. Just going off the growth. That's not even adding a legacy bank to our Galileo platform. That gets you to a crazier valuation. Like 9 times sales. You're looking at about $18 to $20 stock right off the rip. If you made it to the end of the video, I want to say I really do appreciate. I enjoy doing these videos for you. We're going to continue to cover more SoFi information, getting closer to these earnings. Once again, my name is Kyle. Hope you have a great day.